Thank you very much. Thank you for having me here. Fantastic. Let's see. We're almost on schedule, which is very weird for Italians, so that's a good thing. And today I'm going to talk to you about decentralized finance and the new frontiers of cybercrime. And this is something that I know some of you are familiar with, but I hope that I have created something that everybody can understand and listen. So it's going to be a mix of technical and not technical stuff. I am, as Marco, good friend of mine, said, I'm a professor at the University of California in Santa Barbara. Been there 25 years. I started a company. I was a co-founder and CTO of Lastline, malware analysis company, got acquired by VMware in 2020. And I am now, sort of riding the two worlds of academia and industry. I am at the university, but I also work at VMware. And I'm also the founder of Shellfish, which is one of the teams that has participated in most DEFCON CTF, even though we won only once. And so we like all sorts of hacking. And we have different perspective, academic, industry, and the sort of underground. But let's talk about DeFi. So DeFi is a framework in which it is possible to provide financial services in a decentralized manner. And whenever you talk about DeFi to people, you get all sorts of different reactions. You get, enthusiasts, and you might recognize some faces here. They say, this is the new thing. It's gonna take the middleman out. There's gonna be a cross-nation distribution of wealth, unfettered access to opportunity to invest and do all sorts of financial shenanigans. And of course, it is, partly true. It is something that is a promise, but there are also obviously a lot of detractors. And you might recognize some of these people. And they say that it's a scam. It's just a way to create value out of nothing. There is nothing that really backs up all this wealth, quote unquote, and it's preys on people with false hopes of fast gains, and it's not really decentralized as people think because there are always third parties that are involved in making decisions, and so there is a big fight in this domain. And in fact, the detractors recently put together sort of a letter to the Congress signed by many professors and many researchers saying, hey, we need to stop this, or at least regulate this, and make sure that people don't get caught in something that they cannot control, that will, ruin them, steal their money, and so on and so forth. But it doesn't matter. Here, we're not to decide if this is a good thing or a bad thing. We want to find out what it is and how it works. So let's talk about the wild ride. You can see that this is the market capitalization of cryptocurrencies. They went from 1 trillion, and recently they had a little issue here. They just won and lost, I would say, 2/3 of their value. And it's amazingly a terrible thing, a good thing. It doesn't matter. I would say that it's mostly fine. Okay. So the problem is that this volatility is exactly what's the problem with DeFi, and in addition to that, there is a lot of illicit activity. So there is this amazing crypto report from Chain Analysis that describes a lot of the illicit activity on DeFi, and this shows throughout the years the various type of illicit addresses and how much money was sent to that. And this is fundamentally a lower bound. So this is what they could track went to illicit addresses, but obviously it's going to be a lot more than that because there are things that Chain Analysis and other researchers cannot see. And you can see that in 2021 was 14 billion, okay? Of course, if you look at what is the sort of the percentage over the whole volume of transaction, it's very minimal. It's like, very few percentages, if even that much. However, if you look, for example, at ransomware, you can see that they tracked 602 million in 2021, going to that. And in one single year, Conti, one of the famous ransomwares, just made more than $160 million. And if you compare this to the good old day of Zeus, do you remember? Anybody here, remember Zeus? Okay, this malware went on for like 3 years, and there were a huge network of people that compromise hosts, steal credential, creates a network of money mules that were able to transfer this, and all this for 70 million in the end. Nothing. Chips. Okay? Now, thanks to the ability of immediately monetize your attack through cryptocurrency, you can harvest, hundreds of millions of dollars without having to resort to this incredibly complicated structure. So this is definitely an opportunity for malware authors who have not, missed the boat. They saw this and they immediately jumped on it. Okay, so given this, we know that there is some bad stuff. We need to talk about the blockchain. And every time you talk about the blockchain, the memes start, right? You have all sorts of different views and Lambos and HODL and all that stuff. Well, we will try to stay away from the memes, and I will give you a very short tutorial on what's going on. So bear with me. Whoever already knows everything about blockchain, roll your eyes. I will enjoy the wind. For everybody else, here we go. So a blockchain is really a way to create an append-only ledger. So imagine a list that you can only append to, and you have a way to make everybody in the world, in one way or another, to agree on what is on this list. And the list is organized in blocks. So you can add a block, and this block has a bunch of transactions. That's fundamentally it. So if you don't care about consensus and protocols, you can just stick to this. And if you look at the blockchains that are there, Bitcoin is probably the most famous. Ethereum has, 162 billion of value locked into it. And we're going to talk about Ethereum because it's the largest blockchain that allows for smart contracts. And this is fundamentally because if you want to DeFi, really, you need smart contract. As a side note, actually, Ethereum just this September moved from proof of work to proof of stake, which means that the consensus among people on what blocks make the blockchain move from one mechanism in which you have to use a lot of CPU, you remember people complaining about electricity and all that stuff, to a different system that uses a lot less CPU, that's called proof of stake, and so that barrier in some way has been removed. So we're going to talk about Ethereum. From now on, think Ethereum, think smart contract. So these are programs that run using a Ethereum virtual machine. So imagine it's low-level code that allows you to do operation on the blockchain. And usually you don't look at the low-level code. Usually you look at something higher level called Solidity, but there are other higher level language, like you have C, and you have binary, you have C++, Pascal, but everything gets eventually coded down to the EVM. Then we have to talk about transactions. This is very important because transactions are these things that you put in a block that describe various things. Typically, the most common transaction when we think about transaction is I'm giving 1 Ether to Marco, for example. Marco, yes, thank you. You're welcome. And this is the classic transaction. But other transaction could be, for example, I am deploying on the blockchain a smart contract. Now that contract becomes part of the blockchain, and a third type of transaction is invoking the contract or a function in that contract that will sort of trigger the execution of some code. These are the 3 main types of transaction that you can see. And an important thing is that all these transactions, whenever you want to interact with a blockchain, what you do, you throw your transaction in a mempool. Imagine it's a big cauldron in front of you and say, I would like this to happen. And you put it there. And everybody else does the same thing. So there is this pool of things that happens in front of you that everybody sees. So what happened next? Well, you have block producers, okay, that look at this transaction and say, okay, I have to create a block. I'm going to pick this, this, and this, and I'm going to put it in a block. But what makes you decide what transactions go in a block? Well, the block producer will say, hey, every transaction will give me some money as a block producer. So I'm going to choose a selection of the transaction that give me the most money. And so in a way, you can see that there is this game where people that put the transaction in the pool say, hey, if you take my transaction, I'm going to give you a little more money than that guy. If you put my transaction in the block, I'll give you a little more money than the other guy. And so people compete to get their transaction chosen to go in the block. As we'll see, ordering transaction is also important. And you heard about tokens. Tokens are just a way to, they're smart contracts, but they are very standardized, and they're used to represent assets. So tokens can be wrapped Ether, could be wrapped Bitcoin, can be Tether. You can have, USD coin and so forth, and you can trade them one with another. These are all the dramatis personae of, the DeFi, all the various components. And of course, I didn't mention there are also the tokens that are non-fungible, the NFTs, but we'll leave that out for the moment. And then there are centralized exchanges. This is the ramp in and ramp out of the DeFi infrastructure. So how do you start trading in Ethereum? Well, you go to Coinbase or Binance, you get an account, and you transfer your hard-earned money into Ether. And when you trade Ether, maybe you make Ether, you can trade back your Ether from more hard-earned money. So real euros or dollars. This is important. These are the ramp in and ramp out. That's where you can control how things are monetized. Because as we will see, money laundering is a critical aspect of this. And these kind of institutions have to sort of, or should, we should say, they have to sort of follow the same rule of banks. So know your customers and so on and so forth. Okay, enough. Where is the money? So there are two ways to do the money. There is make the money, and there is steal the money. Okay, let's start to say how people make the money. You can find all sorts of different operation. You can have lending operation, derivatives, yield farms where you put your money for other people to borrow and you make interest. These are all legal investments. There are assets and there are ways to monetize and increase the value of your investment. And of course, there are decentralized exchanges. So these are exchanges that actually move one token to one and another. And there's okay, let's look at this in more details. These are called automated market makers. So normally, when you want to trade an asset, you say, I would like to buy some euros. Right now, I am buying a lot of euros because the US dollar is doing great. And euros are, sorry guys, not that much. So I'm buying all these euros. So when I come back to Italy, I have a lot of euros that I bought at a lower price. So in a normal bank, you say, I want to buy some euro. And there is somebody who has a ledger say, oh, this guy wants to sell some euro. And so they sort of make a contact between the two of us. So it requires a middleman. In automatic market makers, you have a pool of money that is already there, and you can go and with a transaction, you can transform one token to another. Now, this is awesome, but of course, it opens up to arbitrage. Arbitrage is a perfectly legal, amazing thing in which you have an asset that is with two different prices of two different markets, and you say, oh, this price is much better, so I'm going to buy a bunch of this asset, and I'm going to sell it on this other market, and I make the difference. That's called arbitrage, and this actually is a healthy thing that helps stabilize the market. Here you have a real-world little arbitrage that brought this guy $1.4 million in one transaction, okay? It transferred Ether to Luna, Luna to Ether, the prices were different, boom, $1.4 million. I would like to hear, oh, right? And so this is very interesting because actually the transaction happens atomically there's one transaction but different exchanges, and you don't see how do they find these arbitrage opportunities, how the execution, you don't see it, you only see the execution of it. So we actually did some research, and there's a paper that we just submitted to a conference, and we look at more than 2 years of all the transactions on the blockchain. And we develop a new algorithm to find all the possible arbitrages that we detected. We found 4 million of them. And we find out that most of the arbitrage have 2 or 3 exchanges in the loop. So you have to imagine you move A to B, B to C, and C to A, and you make profit. And most of them use wrapped Ether. And Uniswap, and V2 and V3, plus SushiSwap were the most used one. Nothing really new here. An amazing thing, we detected $5.6 billion in profit. That's a lot of moolah, okay? Even more interested, we found out that the top 3 operators on this made respectively $1.9 billion, $1.8 billion, and 655 millions. So there are 3 people that have the magic bot that is able to do arbitrage and collect that amount of money. It's stunning. We're still doing research to understand who are these people, how are they doing this, and how can we replicate it. Of course, the order of address matters a lot. For example, we found out that you can have arbitrage that can happen fundamentally anywhere, or you can have backrunning. Backrunning is when you're looking at the mempool, you see, oh my God, look at this instruction. If this gets included in a block, if the arbitrage opportunity opens, so I want to just slide my attack or my arbitrage right behind it in a backrunning situation. And we saw that after April, May 2020, this kind of backrunning transaction became more and more important. So throwing your transaction exactly after another became critical. And this created a lot of bots fighting with each other, driving the gas costs up, for example, or introducing the flash bots. Flash bots are a way to put your transaction but not make it appear in the mempool so nobody can see it. So you're talking to a block producer, say, hey, listen, don't tell anybody, but I would like this thing to go right behind this thing so I can make some money. And of course, this money is shared with the block producer. So there is a lot of different opportunities there that are, again, legal, but very difficult to operate for the normal operators, you and me, and so on. You have to have something going on. Other ordering attacks are sandwich attacks. For example, they look at the mempool, they say, look at this operation. When this happens, the market is going to be a little bit like this, a little bit displaced. So I want to put a transaction right before, buy really cheap, then this happen, sell really high. And so by sandwiching a transaction that you just put on the mempool, by controlling the positioning, you can make money. Or you can do front running, where you say, oh, look at this transaction. It's going to make a lot of money. I'm going to take this transaction, put my wallet as a destination, and put it back and pay more so it gets in front of everything. It's called front running. Another thing that makes it difficult for everybody to just appreciate and use these financial assets. But these are, the make the money. Let's talk about take the money. Of course, you can steal funds. We will see some hacks. There are a lot of scams, like Ponzi schemes, ransomware, we talked about it, and rag pull. Rag pulls are where, for example, Giovanni decides, hey guys, I have this new coin, it's amazing, I invest, and nobody noticed that in this contract where everybody's putting their money, there is a little backdoor, and at a certain date, I just do the rag pull. I go into the contract, siphon out all the data, and run. Actually, that's what the Thodex CEO did, took 2.5 billion and really ran. They caught him in Albania a few months later, and they put him in jail. But this is stuff that is happening. Lots of people lose a lot of money in these scams. So, but let's talk about hacks. This is the no hat, so we have to talk about hacking. There are many different hacks. There is traditional hacks where, for example, people compromise keys, as we will see. There are bridge hacks. So bridges are these very complicated mechanisms that allow you, I told you that there are different blockchains like Bitcoin and Ethereum. What if I have a bunch of Bitcoins, but I want to use them in Ethereum? Then you need a bridge, something that has sort of like a custodian on Bitcoin where I say, oh, here one Bitcoin. And there is one thing in the middle, usually called the communicator, say, oh, Giovanni put a coin in the Bitcoin chain. Let's tell the debt issuer in Ethereum that now he wants to use that Bitcoin on Ethereum, and they create an associated asset on that side. As you can see, there are a lot of moving parts here, and it's very easy to create problems. And that's why most of the biggest hacks, you can see right now, the neuroning network is the biggest one with $624 million for one attack. Sorry, 624 millions stolen in one hack, okay? If you saw the third one is the most recent, the BNB bridge. They stole $586 million. I mean, we're not talking about the $70 million of Zeus in 3 years. We're talking $600 million in 1 minute, okay? So it's pretty intense. That's why I think it's awesome to study this stuff. Even if you like it or you don't like it, it's awesome anyway, right? And so almost $5 billion has been stolen. If you go to Wrecked News, they keep this amazing list of different hacks that, it's just a pleasure to read. But let's look at some of them. For example, the running hack, the biggest one, it was, running was a side chain. So it's kind of a chain. They use Ethereum chain to kind of keep track of what's going on. And the transaction on the chain has to be validated by 5 out of 9 nodes. Well, it happens that of these 9 nodes, 4 were managed by the same people, plus an additional node has authorized those 4 because there was a little bit of congestion, so they share the keys. This guy that arrived got 5 keys and authorized himself to everything. Boom, $624 million stolen in a second. Pretty amazing. The thing that is more amazing, nobody noticed for a week. At a certain point, somebody asked, hey, I would like to get back my 5,000 ethers. They're like more than $5 million. And it says that I don't have it. What's going on? Can you imagine that meeting, that technical meeting that happened afterwards? The Nabat bridge was another interesting one. They updated the contract on the net, and they made a mistake so that fundamentally every transaction was authorized. You could have any signature, and it was fine. Somebody noticed and tried and spent, by mistake, $350,000 in gas and failed. It's like, oh, shit. This is terrible. Let me try again. They did it, and they got it. But do you remember the people that were looking at the mempool? It's like, oh my God, this guy has just made $180 million. What if I take his transaction, I put my address, and everybody was successful? And so there was this frenzy, and you can see it right here. Oh, look, somebody find, this is the value of that particular thing, and in nothing, it became 0. It got everyone, the sharks came in, and everything was cleared immediately. Amazing. More recent one, a wormhole attack. Wormhole, again, is a token bridge between Ethereum and Solana. And this is a classic thing that you see in normal security. So there was a bug in the contract where you have to provide a signature, but you could also provide a pointer to the code that will tell if your signature is correct. Say, okay, so I can provide a signature and also provide the code that will tell if my signature. Easy. I'll just create a contract, do that, point to my own, verifier that say, yes, of course. And so they could mint on Solana all these assets that went back to Ethereum, say, hey, I have these Solana assets, they're correct. Can I have back in Ethereum? And they collect, hundreds of millions of dollars. Amazing. Okay, these are problems that we know. But once you got the money, you have to clean it. And the problem is that all these transactions in the ledger are carved in stone. So we know where the money is. Even for some of these big acts, it's still there. We know that you can go on Etherscan and say, look at this address. Those are the $600 million they stole from that guy. It's still sitting there because taking them out is not that easy. So there are various things you can do. You can use exchanges, you can try DeFi, even gambling, NFTs, all these things can be used. I would say the most common and secure way to do it is to use mixers. So there are these amazing smart contracts that allow you to deposit some money, you get a proof back, then you go take a walk, a couple of weeks, you come back, you give the proof, and they say, yes, you deposited. We don't know what you deposit. We know how much you deposit, but we don't know which deposit you're referring to, but we know that you're right, so here's your money back. And you give it to a different address. This zero-knowledge proof system allows you to completely launder your money in that completely untraceable way. There is no way to tell, that this guy is the one who deposited this money. Unless you're stupid and you go there and you get it back to the same address, or you do it too fast so you can be correlated by time. But if you follow the guidelines, it's really difficult. And that's why, for example, this type of technique was using to launder in 2021, more than $8 billion. And guess who was pissed off? The US government. Why? Because they say, this should not happen. And so most famously, in August 2022, the Office of Foreign Asset Control said, the North Koreans are making tons of money and they're laundering this money so that they can go ramp out in some exchange. We got to stop this. And we got to stop in two ways. They're bad exchanges. They don't check where the money is coming from, especially Suex and Chatex, two Russian-based exchange, and they put it on the list of the embargo, or the do not do business with these people list. And then they went to Tornado Cash, which was the most famous mixer, and say, enough, you're on the list. That means every American that goes to Tornado Cash and you can prove that they use that service can be put in jail for 20 years. Little story, my student from Sri Lanka in my lab was working on Tornado Cash when this happened. And he calls me in the middle of the night and say, Giovanni, I think I'm going to go to jail. I am actually using Tornado Cash. Like, no worries. I mean, you're doing research and you're not using it. You're just looking at the code. But of course, you know, you're from Sri Lanka, you're in the United States, you're freaked out, okay? But the thing is, like, the Tornado Cash is not blocked. I mean, you cannot block Ethereum. Ethereum is an international blockchain, so the contract is still there, still can be used, but Americans cannot use it, which of course means that, you know, a lot of the value is gone. So smart contracts are full of holes. We need to fix it. You know, what to do? Well, the problem is the code is the law. So obviously there is an incentive to do the code right. But if the code is broken, nothing can be done about it. So because the code is the law, you cannot say, oh, we made a mistake. No, the code is on the blockchain and will be there. So we have to find ways to solve the problems. And we're not there yet. And that's why I'm here talking to you, you know, genius hackers of the world. You know, we have to fix this. So you start thinking about it. There are many problems. And for example, one way to look at it, and it's now the standard, is to do audits. There are a lot of companies whose only job is to look at contracts, looking for problems, and of course, like, it's like pen testing for code. So the only thing you know is that somebody supposedly good look at your code and said, well, it seems like there's nothing wrong with it. And that's why if you look at Wrecked, you know, in the list of the hacks, it's like, oh yeah, stole 50 millions. Oh, it was audited by Zeppelin. You know, stole 20 million. So it became the wall of shame of, you know, of thing. And the other thing that is interesting is there are bounty programs that are amazing. Guys, you can do, I have an ex-student of mine that just published this insane hack in Linux and got from the Linux kernel project a bounty for $90,000. And he was like, yeah, I got 90,000. Say, with that level of complexity, you could have broken some DeFi thing and got a lot more. And in fact, another member, ex-member of my lab, Jay Freeman, known as Saurik, just destroyed a bridge and got $2 million in bug bounty, which is pretty substantial. So there are opportunities right there, guys. Start working on it. So, but the most important thing, I mean, using humans to look at the stuff is important, but what we really need is automated analysis. We need static analysis, dynamic analysis, tools that are able to identify vulnerabilities at scale. And the cool thing is that smart contracts are small, which is, you know, something that doesn't happen when you have to find vulnerability in Chrome, which is, you know, millions, $40 million lines of code. And so they're small, so you can apply techniques that normally would not scale, but in this case they would. Not only, you know, if you have done static analysis, one of the problem, or dynamic analysis and symbolic execution, is that you can have a loop and you don't know how long it's going to go. And suddenly, you know, the complexity of the analysis escalates. So the advantage of this, since the gas price limits the time of execution, you can now make amazing assumption about how long your program is going to run. Because the smart contract, you know, the more they run, the more gas they use, the more they're costly. So they will not run for long. This is something that we need to take advantage of. And also, the Ethereum blockchain is there. So there is no hidden code. All the code, this is an amazing thing for doing research on the blockchain. All the transactions are there. All the code is there. Some of you are, you know, malware analysts. Have you ever encountered the problem? Oh, there is this new strain of malware. Well, we don't have the sample. Oh, we don't have access to this. Oh, we don't know exactly what happened. On the blockchain, you know everything. okay? You have no, so it's a democratizing research target. You have all the data that you need. For example, you can look at reentrancy. This is a classic problem. It was actually behind one early hack in 2017 called the DAO. And basically what happens is, imagine this, there is a bank, and so you are an attacker and say, hey, I would like to extract some money from my account. They check if you have the money, they send you the money. How they send you the money? They call you back, okay? Because that's the way to do a transaction and send you the money. But in the function that gets called back, you can say, oh, I'm going to call again. And the important thing is that this third step, where they actually take money out of your account, has not happened yet. So they can call it back, and again, and again, and again, and again, and keep extracting value that they don't have anymore. And that's how they completely depleted the DAO system, okay? So these are problems that we know there are reentrancy problems, and we have to develop tools to do that. And in fact, we did. For example, we have this paper, Sailfish, that we published this May, that does exactly this. We look at different ordering of transaction. We find out if there are some accesses that are suspicious. We use dynamic symbolic execution to find how we can get to that particular state, and we find vulnerabilities, okay? But this is a simple example. We need a lot more than that. And so my call to action to you guys is that we need better tools. Perfect. We need static analysis. We need model checking. All the tools that you have developed, that you have learned to use in looking at normal code, directly apply also to smart contracts. So what are you waiting for? Develop the next generation of tools for this. What we have right now is not good enough, okay? So really, I think that there is green pasture here. You don't have to like the blockchain. You can think it's total bullshit or it's the best thing since sliced bread. We don't care, but there is an opportunity here to do some real interesting work from the research point of view. Also, we need more people to looking at smart contract. I think compared to the amount of money that there is at stake, the group of people that are looking at this stuff is very small. We need a lot more people doing this job. And we also need a way to stop these heists. We need a way to, stop the steal, if you want. I know it's not exactly what you want to hear from me, but this is an inside US joke. Stop the steal is the Donald Trump, the election didn't happen thing. So, for example, a Stanford researcher, Dan Bonnet, amazing guy, recently proposed reversible tokens. So tokens that are like all the other tokens, but if people agree on, we can take the time back and give it back to people they were stolen from. So these are the things that we need right now, and it's really important that all of you, if you're interested in it, participated in it. So, concluding, the DeFi ecosystem is fascinating. It doesn't matter if you believe in it or not. I think the jury's out even for myself. I am not, a crazy, hey, we have to do this. I just think it's really fun. You remember the 90s where we have, buffer overflows and it was cool? I mean, we're there with DeFi. There are these very simple things that have an amazing impact, but we're not taking advantage of it. The tools are primitive, and we need more experts. I am not even, an expert enough to do that, and I think that you guys are 20 times faster than me. You're young and full of enthusiasm. Please do that. And, if DeFi becomes really the best thing in the world, great. We're going to be ready for it, and if it burns, well, maybe we're going to be fine. Okay, so before I go away, I know that everybody wanted to hear about NFTs. NFTs are crazy. We have a paper that is going to be presented this November at ACM CCS, where we study NFTs and the ecosystem. If you want to hear about all the scam and the nasty stuff that happens there, this is the paper. And with that, thank you very much, and I'm ready for some questions.